What if you could see where big traders and banks are buying and selling before the price makes a big move? In this video, I'll show you a very simple yet powerful trading strategy using the order block indicator together with RSI. This strategy can help you find high probability trades with clear rules, and you can use this strategy right away. Let's get started, but before that, please like this video to support the channel. What's an order block? Before we start using indicators, let's first understand what an order block is. An order block is a special area on the chart where big players in the market, like banks, hedge funds, or large institutions, have placed a lot of buy or sell orders. These big orders make the price move strongly when they happen. For example, a lot of buy orders in one area can push the price up fast, and a lot of sell orders can push the price down fast. Order blocks are not random areas. They are zones where the price suddenly changes direction or makes a big move after a calm period. These areas are very important for traders. They act like a strong support or resistance levels, so when the price comes back to these zones, it often reacts again. Order blocks also show us where the smart money is active, which means we can see where big traders are entering or exiting the market. In addition, order blocks help us understand the balance between supply and demand. A strong order block usually shows a high concentration of orders, and this means the next price move is likely to be powerful. In short, by learning to identify order blocks, we can see where the smart money is moving and plan our trades more effectively instead of just guessing. Adding the order block indicator. Now let's add the indicator. On TradingView, click on Indicators and search for order blocks. I'm using the one from Flux chart. It's simple and clear. Once you add it, you'll see colorized zones on your chart. Green zones are bullish order blocks, areas where big buying happened. Red zones are bearish order blocks, areas where big selling happened. These zones are calculated using price movement and volume, and they highlight the origin of strong moves in the market. For example, this green order block acts as support and pushes the price higher, and this red order block pushes the price down. Important note: green or red order blocks don't give direct buy or sell signals, but they make key levels where you can expect reactions in the future. Adding RSI for momentum confirmation. Next, let's add RSI indicator. But why do we use RSI in this strategy? Well, the order block zones show us where big players acted, but not every zone will lead to a strong move. Some zones might fail, or the price might move the opposite way. This is where RSI comes in. Think of RSI as a momentum filter. It tells us the current direction of the market. By trading only in the direction of the momentum, we avoid entering losing trades and increase our chance of success. Now let's add it to the chart. In the indicator section, search for RSI and keep the default 14-period settings. For this strategy, we focus on one simple level, the 50 line. When RSI is above 50, it shows bullish momentum is in control. When RSI is below 50, it shows bearish momentum is stronger. By combining the order block indicator with RSI, we can find high probability trades. It's simple, easy to read, and perfect for both beginners and professionals. The strategy rules. Now let's break down the exact rules for buy and sell setups. First, we wait for the price to enter a bullish order block zone, which you can see as the green area on the chart. Next, we check the RSI indicator to confirm the momentum. For a bullish trade, we wait for RSI to cross above the 50 line. This step is crucial because even if the price reaches a green order block, it might not move up strongly unless the bullish momentum is building. Once both conditions are met, price in the green order block and RSI above 50, we have a potential buy setup. Now we wait for a bullish candle to form either inside the zone or just after it. This gives us a clear signal that the market is responding to the order block and the momentum is confirmed. At this point, we can enter the trade with confidence. For risk management, place your stop loss just below the order block zone, giving the trade some space. For take profit, we recommend a risk to reward ratio of at least 1 to 2, which means targeting a profit that is at least twice your potential loss. Sell setup, bearish trade. For a sell trade, wait for the price to enter a bullish order block zone. This is the red area on the chart. Then check the RSI and wait for it to cross below the 50 line. Once both conditions are met, we have a potential sell setup. Next, wait for a bearish candle to form either inside the zone or just after it. You can enter after the candle. Place your stop loss just above the order block zone, and for take profit again, use a risk to reward ratio of at least 1 to 2. This combination is very powerful. The order block shows where to enter, and RSI tells us when to enter, making our trade safer and increase our chances of success. Real chart examples. Let's walk through a couple examples to see how this strategy works in practice. First, the buy setup. The price comes down and enters a green bullish order block zone. We check the RSI. At first, it's below 50. A few candles later, RSI crosses above 50 and a strong bullish candle appears. This is our buy entry. Place our stop loss just below the block and set our take profit at twice the stop loss distance. Soon after, the price starts moving up strongly and the trade hits our target. Now let's look at the sell setup. The price moves up and reaches a red bearish order block zone. At first, the RSI is above 50, showing bullish momentum. A few candles later, RSI crosses below 50 and a strong bearish candle forms. This is our sell entry. Place your stop loss just above the red order block zone and set your take profit at twice the stop loss distance. Soon after, the price starts dropping sharply and the trade reaches our target. As always, let's test your knowledge with a quick quiz. Why do we use RSI together with the order block indicator? A. To draw support and resistance levels manually. B. To filter momentum and avoid weak setups. C. To find the exact stop loss size. Write your answer in the comment. And that's the order block and RSI strategy. It's simple, clear, and powerful. For your next video, I recommend checking out my video on the best RSI settings. If you found this video helpful, please like, subscribe, and hit the bell icon so you don't miss any future strategies. If you have any questions or suggestions to improve the videos, drop them in the comments. Since the channel is still small, I have time to answer all questions and comments personally. Thanks for watching and I'll see you in the next video. Good luck with your trading.